Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Thursday, the 9th of November, 2006, and the market's just closed up. So we've got the Nasdaq 100 on the screen right here. The Nasdaq 100 did make a new high for the year. The old high was 43.31, and you see that today's high was 43.35. The market then did pull back from that new high level. In fact, it gapped higher, made that new high, and then we pretty much had a pullback for the rest of the day. Now the market did come down to this rising 5-day moving average, and it does have support in that area. It looks like for now. So again, we're still in an uptrend, so we have to consider the market innocent till proven guilty. However, there are a lot of times when the market makes a new high, gets those big headlines, especially after a big event like an election, like we just had, and then those moves to the new highs fail a lot. So we have to be on high alert here. Again, there's nothing here to indicate that the trend has been damaged on the daily time frame. But as I said yesterday, the job right now is money management. That's our number one priority, and to protect the profits that you've retained during this bull run that we've seen over the last couple months. Now, looking at the 10-minute time frame, again, we've got support, it looks like, down near this 42.60 level. We've got this rising 5-day moving average as well. The bigger number that we're going to continue to focus on is 41.60. That would make a low, piercing below that would make a lower low on the daily time frame. And I think that would bring us down at least to the 50-day moving average down near 41. Of course, getting to 41.60 is going to be more damage than 41.60 down to the 50-day moving average, just because that's only the distance it has to travel here is $1.20 versus another 60 cents, 55 cents on the downside to attain the 50-day moving average. Now the S&P 500, the spiders on the screen, they also made a new high for the year here, and now this is going to set up the potential for, it's not a double top, so you'll probably see people talking about a double top, but a double top is completed when it takes out the low of the M, basically. If you look at this, it resembles the letter M. Once it takes out that low, then what we would do is take the height of this pattern, which is, let's just call it 139, down to 136. We'd subtract 3 points from that and come up with a target near 133. That would be the implication of breaking that support at 136. In fact, that number is 136.20, is the level that we've been focusing on earlier in the week and where we saw the market rally strongly from. This, the S&P 500 also came down to its rising 5-day moving average and tested the lows from yesterday's open. So we've got some support in this area. In particular, I think down towards 137.5. That's a number we've been focusing on as well. Breaking below 137.5 then does put this 136.20 level into consideration. Once we have that happen, then we want to start to think seriously that this market is in jeopardy of breaking down on a bigger picture. We take out these lows at 136.20, then maybe we're going to see that 133 level obtained. Perhaps we'll see a little bit of support first, though, near that rising 50-day moving average. So right now, the market is telling us it's time to be extremely cautious in here. And one of the biggest areas that's broadcasting that message to us is this semiconductor index, the SMH. We've been focusing on this one. It kind of looked like it was going to be okay in here for a little bit as it got back above that 10-day moving average. But that 50-day moving average is now declining. If you look 3 days ago, it was 34.05, then 34.05.3, now 34.00. And I said 35. 34.05, 34.05, now 34 even on the 34.03 rather on the 50-day moving average. So that's declining, and that tells us that this market is now guilty till proven innocent. What it would take for me to become outright bearish is a break below this prior low right in here. Breaking below this level at 32.60, that would tell me that the bears do have control of this market, and I think that this whole rally would fail. We'd see these semiconductors down near 30.5 or so, and that obviously would not do it would harm the market greatly if that were to happen. So keep an eye on those semiconductors. The MidCaps, MDY, these guys weren't able to make a new high at least yet. We've got the 10-day moving average crossing through the 20, just telling us that there's a little bit of indecision here. In order for the sellers to really gain control and for me to be concerned, I think it would have to go down below, definitely back below that 50-day moving, or I'm sorry, 200-day moving average. And right now we've got the 50 and the 200-day moving average at that same point. So I'd say kind of neutral in here on the mid caps. On the 10-minute time frame, we've got support down near about 42.80, 142.80. Breaking that, I think we see a test of about 141. So all in all, when it comes to the market, it's telling us be very cautious in here. We've had a great rally, and now it looks like there's some profit taking. Let's see how long this profit taking lasts. Again, the primary trend is higher for most of these indices, so innocent till proven guilty, but warning signs are being broadcast very loudly from the semiconductor group. Vion Pharmaceuticals, we've been looking at this one the last few days. It closed at $1.48. I've been saying it really needs to get above about $1.58 to get going. Keep your eyes on this one. It continues to act okay in here. No damage done really, but it's making these little lower highs intraday. So even getting back above 155 might become the catalyst for a little bit further momentum. But stock acts pretty good. SPRT, Supportsoft. We got involved in this one at $5.33 a couple days ago, and we've been raising our stops now. Yesterday we had our stop at 557. I think you can raise that once again below this low here. This is 568. So let's raise our stop by a dime from 557 to 567, and that will give us a 34-cent profit if we were to be stopped out there. So that stock's behaving well in spite of the overall market weakness. Concurrent Computer, this stock just holds up like a rock. Just building this little launch pad is what it looks like to me. We're seeing volume drop off in here. I think it's about to lift off out of here, and maybe it needs to get above this 203 to 205 level for it to happen. But so far it acts, continues to act good. So keep your eye on CCUR. Curis, symbol CRIS. We've been involved in this one for a few days. It broke past some pretty good intraday resistance at the 155 level. We had gotten involved above there a couple days back. So we had our stop yesterday at $1.62 is where I suggested we raise it to. I think you can now raise it to $1.69, and that would lock in about 15 cents on Curis. We got involved in NightHawk yesterday, NHWK. NightHawk we got involved in above $21 a share, and I suggested that we raise our stop to where did I say we raise our stop? I have it written down here that we should have been stopped out with a 15-cent loss. So we had our stop at about 20.83 and got stopped out of there with a 15-cent loss. InfoSpace, we had been involved in for a couple days, had our stop at about 20.03. There was a print up above that level. I think the stock still looks like it should break down, but officially we're stopped out of this on this tick right here, so no position in InfoSpace. CMED, ChinaMed from yesterday, said we want to buy it above 25.95. Chasing it, a nickel wouldn't really be considered chasing it, I don't think. So you had an opportunity to get involved in this one, and it made a real nice run. If you're still involved in it, I would say your stop goes at about $26.55. You want to lock those profits in after such a nice big rally. You don't want to let those go for sure. RealNetworks, we're looking for this stock to get back up above some resistance. That never did occur, so no trade taken in RealNetwork today. Sina, this is Sina Corporation. Wanted to get involved in this above 28.05. We did have that opportunity. The lows were down near about 27.77, and our stop was to be at 27.68. So we can raise that stop right now, I think, just below that 5-day moving average. Let's say the stop now is $27.88. That would give us a theoretical risk right now of about 17 cents in Sina. CHRW, this is CH Robinson. We were looking to sell this stock short below $41.55. Let's take a look at the 5-minute time frame. We had that opportunity. This was a good little trade in here today. I took this one too. And I said that if it got down to 41 bucks a share, we want to put our stop to break even. At this point, I think you can put your stop at about $41.35 in CHRW. Target is 40. I still think this looks attainable. This weekly time frame is looking like death for CHRW. And finally, we had mentioned LTS, Ladenburg Thalman, wanting to get involved in this stock above $1.35. So we're in officially at 136 today, and I would say you want to put your stop at about $1.33.